2020 has been a crazy year overall, and the stock market last year was no exception, with its record-setting highs, then record-setting lows, followed by immense volatility, and then ending again with record-setting highs. If you were lucky enough to buy in at just the right time, you would have seen an extraordinary gain in your investments. But if you weren't so lucky, then the volatility could have done some serious damage to your financial accounts. For me, I was fortunate enough to rebalance a big part of my portfolio in early April 2020. So I didn't quite catch the bottom of the market retraction period, but I got in close enough to ride the recovery way forward. If you'd like to know what strategy I used in identifying my sell and buy points last year in 2020, then check out this video here that I created on my trading strategy during a recession. I'll also link it down below in the description section. And the best performing mutual fund in my portfolio in 2020 provided me with a gain of over 60% in this past year. If you'd like to know what that fund is and the methodology I used, which ultimately led me to choosing that particular fund over all the others, then stick around as I go over the best performing mutual fund in my portfolio in 2020. Welcome back to Daniel's Brew, where I talk personal finance, investing, and career development. So without further ado, if all you're here for is the name of the mutual fund in question, then the best performing mutual fund for me in 2020 was FNCMX, the Fidelity Nasdaq Composite Index Fund. Now, if you'd like to know why I picked this investment option and why I'll continue to hold it for much of this new year in 2021, then let me start at the beginning with the composition of my portfolio as a whole. Now, my investment portfolio in its entirety is typically broken down into 4 different components: stocks, mutual funds, leveraged or inverse ETFs, and cash. Stocks typically make up the majority of my holdings at around 50% of the portfolio and gives me a good balance of growth trajectory and risk. For my longer term retirement accounts, I typically invest in a couple of safer mutual funds that are lower cost and lower volatility. I also maintain a small position of speculative assets, including some leveraged or inverse ETFs. And lastly, I try to keep a small position of cash on hand for any new and quick momentum opportunities that come about in the near future. And specifically within my mutual fund bucket, I typically cycle in and out of different total market and technology index funds depending on the market sentiment throughout the year. But for most of 2020, I've been holding on to this, the Fidelity Nasdaq Composite Index Fund, for the following 3 reasons. First, FNCMX has one of the lowest expense ratios compared to similarly performing funds in its category. Let me show you what I mean. Let's navigate over to fidelity.com for this explanation. For mutual fund research, I found that Fidelity tools are among the best. And what's great about them is that most of the online research tools that they have, including this mutual fund screener, is completely free to use, even if you don't have an account with them. As you can see here, I'm not logged in at all, but I can still access this research tool on their site. By the way, as a side note, if you'd like to see a side-by-side comparison of Robinhood, Webull, Fidelity, and ETRADE to see which one is best for the beginning trader, then check out this previous video that I've done here on that particular topic. So back to Fidelity, this screener tool comes with a lot of selectable options. But for the sake of this exercise, let's just get a list of all of the funds that have a high Morningstar rating, high returns, and then low expense ratios. It looks like we have 16 funds matching here. So in the list of results, you first see the top 3 recommended Fidelity funds, and then you see a list of all other mutual funds that match your criteria below. Let's just reorder the funds by last year's performance and find 4 to compare with. We'll go ahead and select the top 3 recommended Fidelity funds here, and then let's pick this one, the second highest performing fund in this list. Then hitting the compare button takes us here. And now let's add our FNCMX fund as the 5th comparison. So now let's take a look at the snapshot view on this tab. As you can see, all 5 funds have 5-star ratings from Morningstar. They all have low expense ratios, and they're all relatively the same in terms of risk category. In the returns area, you'll see that all of them except for FNCMX are classified as high returns. We'll talk a little bit more about why FNCMX is listed as above average instead of high in the next section. But for now, let's come down here to the chart. Looking at this 10-year view of the overall performance, you can clearly see that FNCMX, which is the dark green line here, outpaces the other 4 index funds by quite a bit of margin. Let's take a closer look at that in this next tab. This table gives you a historical view of the yearly performances of this fund. Now they have a year-to-date column that shows the performance of the current year that we're in, which, given that it's only January 8th at the time of this recording, means that we're only looking at 4 days worth of actual trading so far, which is likely why you saw in the previous tab that this one was rated above average in returns instead of high. But the thing is, I don't usually look at the year-to-date numbers, especially given that this represents only 4 days worth of data. It's not really a useful representation of the fund's performance so far, but rather I like to look at complete time periods, like the 1-year, 3-year, and 10-year columns here. As you can see, if you look across the board at a 1, 3, 5, and 10-year perspective, FNCMX outpaces the rest of the 4 funds by a wide gap. Let's also look at the expense ratios. As you can see, it's the second lowest out of all of the funds listed. So when you look across the board at a broad time frame, this fund is not only the best performing of the bunch, but it's also one of the cheapest. The second reason why I really like FNCMX is that from a fund behavior standpoint, it measures positively on all of the risk factors. On the risk tab here, there are 4 indicators that you'll want to pay attention to: the standard deviation, the Sharpe ratio, the beta, and the R-squared factor. The standard deviation measures how much a fund's return varies over an extended period of time. A higher standard deviation indicates a wider variation of past returns and thus greater historical volatility. But in the case of FNCMX, the deviation is 21.08, which is less than most of the other funds, and that means that it provides a more steady, more consistent return year over year versus the other funds on the list. Next, the 3-year Sharpe ratio is basically a measure of the amount of risk versus reward for the fund. The higher the ratio, the better the fund's return rate is, relative to the level of risk it's assuming. Rephrased even more simply, the higher the number, the less risk you take for even more of a gain. And as you can see here, FNCMX also has the highest Sharpe ratio in the group. After that, the beta is a historical measure of the fund's sensitivity to market movements, meaning a beta of more than 1.0 means that the fund moves more violently compared to the market itself, and a beta of less than 1.0 means that this fund has less of a reaction than the market as a whole. So as an example, if the overall market has an amazing up day one day and it spikes 10% within that trading period, a fund with a beta of 1.2 might even go higher than 10% during that same time, while a fund with a beta of say 0.8 might not react as much to the same market movement. FNCMX seems to be exactly in line with the reaction level as the overall market, with a beta of 1.0. And lastly, the R-squared is the same type of measurement as the beta, but it tracks sensitivity to the fund's tracking index as opposed to the overall market. FNCMX tracks against the Nasdaq 100, and again, a 1.0 here for this fund. So what does all of this tell us in totality? It says that FNCMX has historically shown a higher rate of consistent return, while being stable enough to closely track the performance of the market and its underlying index. In other words, when the market has an up day, you'll typically see FNCMX going up as well. And in the past, its returns were steadier and noticeably higher than other similarly compared mutual funds with the same composition and objective. Now, there are still many other tabs and other data points that you could look at, but for me, the third metric I usually consider when reviewing a mutual fund is the fund's management makeup and tenure. You can simply go to the next tab for a quick overview here, but to get a more comprehensive look, I usually go to the fund's details page for this. Now on this page, there's a lot of information, and if you're a data junkie like me, you can easily spend hours here just poring over the numbers and the stats. It's a lot of fun. Well, that is for me, but it might not be as interesting for you guys, so we'll just skip down to the fund management section that I mentioned before. So here, it says that this mutual fund is managed by a global asset management firm called Geode Capital. And if you do a little bit of research on them, you'll see that they're an investment firm that dabbles in many different types of advanced asset strategies. And it looks like they've been with this fund for over 17 years now, and they also manage a large number of other Fidelity index funds. For me, I typically like to see fund managers with long tenures within the same fund and consistent and steady results over the lifetime of the management, both of which Geode Capital seems to exhibit with FNCMX. And as a bonus tip, the last thing you should look at is to see what the composition of the fund looks like, particularly its top 10 holdings. This module here shows you that this fund is very heavy on tech, and given that big tech has done very well in the second half of 2020, it's no wonder that FNCMX has outperformed those other 4 funds that we've looked at. Now, as I've mentioned before, there's a lot of other information that you can dive into about this mutual fund. And I usually like to spend a few hours on this details page obsessing over all of the different individual data points this page has to offer. But in the interest of time, I'll close off on this video here. But if you guys are thinking about investing in a new mutual fund or would like to check out this Fidelity Nasdaq Composite Index Fund in more detail, I'd highly encourage you guys to spend some time on Fidelity's website, especially on the fund details page. There's a lot of information you can digest here on just about any type of mutual fund. Remember, before diving in on a particular stock or fund, you'll want to make sure you do your own research and make sure you've done enough analysis to feel comfortable in whatever your investment choices are. Getting as much knowledge as you can on every type of investment will give you peace of mind, especially when the market goes through a rough patch or a large recession, as was the case in the beginning of 2020. So that's it for today's session of Daniel's Brew. If you're new to investing and trading, then check out this playlist that I created here on the Beginner's Guide to the Stock Market. It goes over all of the basics like what a mutual fund is, what an ETF is, and what some of the other basic principles and concepts are of trading in the market. And if you're looking to open up a new Robinhood or a Webull account, you can use my referral links below to receive a free stock from them when you sign up and make your first deposit. And finally, if you found this video helpful or entertaining, then make sure you hit that like button and subscribe so that YouTube will surface this video to more viewers like you. So thanks for joining me today on Daniel's Brew, and we'll see you next time.